Well, good morning, folks. How are you? If you would be so kind as to send me a post on X, let me know you can hear me. Everything's 5 by 5. Thank you, Lee. Thank you, Adam. Thank you, Rusty Gun. All right. Well, it is a good morning. Are you ready? Today's topic for a Shotgun Saturday is keys to infinite setups that yield. When I was younger, let me just break the ice right now. We're going to be talking about Bollinger Bands and CCI settings. So, is an infinite number of setups that you can find in the markets with any time frame with a Bollinger Band. I can't do it. I thought I could do it. But I'm sorry. Just want to make sure you're paying attention. There are no indicators around here, man. It's Saturday. Wake up, man. So, when I was 20 years old, the weekends were a source of anxiety, where every one of my friends were all like, "Yeah, I'm cutting loose." Either they're rolling up a fatty and smoking a doobie with the rest of my friends, or they're getting drunk or waking up with girls or guys that they just met the night before. And I would be sitting there anxious about the trades I'd be missing in the coming week. I would be obsessively thinking about what happens if I watch the charts and I draw out my charts and then I miss the moves. And then I'll have to wait for another week. And I was always constantly worrying about what if. And maybe it is similar to you. Maybe you're thinking the same thing, but it's even worse for you probably because you're learning from me. And I have a lot of things that can get into a trade. I have lots of entry mechanisms, lots of conditions and setups that would yield a limitless opportunity. But that limitless opportunity causes you to feel like, which one's right for me? Which one's right for me? And that, unfortunately, is one of the most expensive things when you're learning from me, because I can't give that to you. That's something that you're going to have to discover on your own. And a lot of it's really dictated by your personal life. You may have school, you may have a job, you may have a family life that says you don't have much time, but you have this small little window of time in the day, or this day of the week even, where you have to do whatever you're going to do in trading that day and only then. Now, I don't have an answer for something so specific as that because, let's just face it, there's enough to go around in terms of opportunities, but when you make your universe so small and so finite that you can't really breathe as a trader, unfortunately, you're going to have to make some adjustments and changes to your personal life and make yourself more. Unfortunately, you're going to have to make some adjustments and changes to your personal life and make yourself more accessible. And if that's not possible, then you're going to have to defer trading at a later time when you can do so. That doesn't mean you can't learn by looking at hindsight. But in my 20s, when I first started doing this, I was very anxious that I was always going to miss the next moves. So it kind of like was the catalyst for me to sit down and try to figure out, what it is that I have to concern myself with in advance. So that way I wouldn't have to be obsessively thinking about the fear of missing a move. But little did I know, I didn't even understand what constituted a setup that would realistically form, because I was at the delivery of whatever indicator I was using at the time. So I had to yield myself to, I have to wait until that indicator does this. And because I was working, I was driving a truck, I could only see the numbers on a quote check. That wasn't giving me the indicators. That wasn't telling me if it was overbought or oversold. It didn't tell me if there was a type 1 divergence, just a classic divergence where the indicator fails to make a lower low when price makes a lower low, or makes a higher high in price but fails to make a higher high in the indicator. That's a traditional, typical type 1 divergence. And I started off trading that. That was like my thing on an hourly chart with a 50-day moving average. That was all I did. And when the markets are going up predominantly, and you're taking oversold conditions like that, it's pretty much a no-brainer. And that was my initial luck in the marketplace, because I was only doing one thing. I was a one-trick pony, scared to go short, didn't even know what that meant. But in a truck, like you in university, or you working a job, or you having constraints that your family says you can't do it as much as you really want to because you have responsibilities as a father, as a mother, or whatever. So you can't be in front of the charts when that indicator indicates that there's something for you to do. And that was problematic for me. I wrestled with it. I tried to come up with all different kinds of ways to work around that. And every time I did it with real money, I lost. Every single time I tried to make little subtle changes and tweak it here and tweak it there, trying to crack the code of absentee trader, that type of approach. And it didn't work out well. So the Lord basically said, listen, you got to start studying what has happened at very specific times. Pay attention there. Look there. So when I started looking at charts like that, I stopped looking for how many times a divergence formed. And you've probably done that in the past before you come to me, or maybe it's the same thing with my information. You look at old data, because I encourage you to backtest. I encourage you to collect opportunities where it's happened in the past. And you get excited, like, wow, man, look how many times it happens. And you start collecting it and you start thinking to yourself, I've seen it work like 18 times out of the last 20. So even if I mess it up, see if I do it, half-assed, and I go in, I try to do it just a little bit less than what ICT would approve of if he was sitting next to me, I still probably have a good chance of making a grand at least a week with my funded account, or at least pass my funded account, or get a withdrawal from my live account. And you kind of like sweet talk yourself into it. And I did all that stuff too, folks. I did all those things. But you have to look at how often you have the opportunity to be in front of charts. That has to be completely worked out in advance. Otherwise, it's going to be a source of stress. If you're in a relationship and they're not on board with what you're doing, they don't care that you really believe that you're going to make money because they didn't see you do it yet. They haven't seen you do it week after week, month after month, year after year, and replace your job with it. So they're not going to have the same affinity for it that you do, or that you're trying to muster. You're trying to encourage yourself to stay focused, to be diligent, do what ICT says, focus, cut everything out. That's hard with your family. That's very, very hard, and I paid a price at doing that. So one of the things that I felt led by the Lord to do is stop looking for the frequency of indicators. And I started looking for the frequency of price delivery. When did the market generally create these repeating price runs? And when my mind shifted from indicator-based revelations in price to that of what tends to happen systematically, what tends to happen on a almost time-based schedule. Not every day, not every instance at that specific time or that day of the week or that month, but by far and large, it usually happens. And in and of itself, that is a huge advantage. And that's what got me excited, where I would have the energy to work 13 hours with drive time back and forth and stay up until the wee hours of the morning on work days and go to work with 2.5, 3 hours of sleep, driving, cranked out on Dr. Pepper, Mountain Dew. Like they were my energy drinks. Okay. And I would just literally just plow through my route as fast as I could get done. And it never got done any sooner. But I was so excited to go home and see what the market did. Now, sure, I watched it on my Quotrek, which was a little handheld device, kind of like an old transistor radio. And for those who don't know what that is, you can Google it and see it. I had that duct taped on the windshield of my truck. And I'm delivering candy and cakes and servicing coffee machines and soda machines and cold food machines. Trying to get home so I can see what I can do tomorrow. And that completely changed when I said to myself, I have to worry about one thing. I got to be on time. I got to be on time in every sense of the word. I got to be on time to be in front of the charts when it should move. See, that's one of the biggest things that I discovered when I was chasing every educator, every author, every book that came out, every new course, every new thing that came out, every new gimmick. Every person mentioned that this is the person. This is the person. And you see it when I make a post on X and other people that have a larger following. When they make a post, you see these bots that come up. I stumbled upon this guy here, this gal here. She's doing amazing things. Thanks for making $10,000 for me. That kind of stuff worked real easy back in the 90s. And I fell victim to that kind of stuff. Today, it's kind of cheesy and nobody should pay attention to that. Because if you're chasing constantly, and maybe I'm one of those individuals for you right now, if you listen to what I'm going to talk about today and really take it to heart, I promise you, you won't chase anyone else ever again. You'll stop and you'll look in the mirror and say, I am all that I need. It's very simple in terms of trading, but what makes it hard is you can't get out of your own way. And I was like that for myself. I complicated things. I wanted to be perfect. I wanted to be right. I didn't want to lose. I only wanted to have an equity curve that went straight up. I never wanted to miss a move. Now think about the practicality of that. Is it realistic? No. But as a young 20-year-old and making a little bit of money in the beginning with luck, you tend to lie to yourself and you say, man, I'm the bee's knees, baby. I got this all figured out. I'm not natural. I wasn't good in sports, but look how good I'm at this. So you fill your head up with all kinds of nonsense and you start believing it. Until the market shifted from a bull market to a bear market, and then I couldn't do anything right. So I had weekend anxiety. I worked all week to make very little money, to spend the weekend stressing. And maybe you're feeling that. And I want to just gently remind you that you're thinking about it too obsessively. And you're placing a scheduled arrival of your understanding that you don't know when it's going to happen for you. But you have to free up that possibility for you to have it happen whenever it's supposed to happen. As long as you're diligent and you apply yourself every single day, even if it's just 30 minutes a day, studying, looking at what the price has already done, but specifically studying when it did it, on what day it did it, on what week of the month, of what year, 12 months, what months are real active. When I listened to Larry Williams in his course, he mentioned this day of week. And I'm like, this guy's got it down like that. No wonder he turned $10,000 into $2.2 million. You heard that right. He just got hurt and dropped down and drawdown, but ended it with over $1 million for the year. So I was thinking to myself, if he's got it figured out like that, he's got himself to a position of control over himself. Now, maybe if you listen to him and when he's been honest and he's came out and said, look, it was real hard to be around him that year in 1987 because he was focused. He was really dialed in. He had no time to be talking with anybody else, even his family members. I'm sure I can relate to that because in my 20s, that's how it was every single day. Every single day, I felt like I was in the Robbins Cup. And I was only trading with a $1,500 account. I was trying my hardest to do it on a credit card loan. And you guys got it made, man. $100 here, less than, and you can have the imaginary $50,000 funded account. Come on, man. You have all the advantages, but you're placing so much emphasis on being there right now, so fast, it's unrealistic. And when you can't fulfill that, you can't live up to that, you start beating yourself up. Even if you don't journal, you're talking to yourself while you're driving. You're talking to yourself in the shower. Man, I'm so stupid. Why'd I do that? Isn't it amazing how after you lose, after you blow an account, you start thinking how great that trading system would have been if you just would have followed it? Like, I did all those things, built up this plan. This is what I was going to do. And then I did everything but that, lost money, and now you really love the trading plan. It's like a girlfriend or a boyfriend that you didn't really appreciate when they were with you, but when they're gone, absence makes the heart grow fonder. And I went through this cycle over and over again, looping. And I said, you know what? The problem is I'm not on time. I'm never on time. So I have to be acclimated to when the market is going to do something. So it was very amazing, astonishing, revelation for me to go through time-based studies and see that there's this repeating thing that happens all the time. All the time. It does these things over and over and over again. So when I sat down, I thought to myself, I'm going to make a market where I can codify, where I don't have to think about it. I don't need to think about it. I'm going to codify PD arrays that tell me exactly when I'm going to do something, because I know the market's likely to deliver a specific type of price run at that specific time, up to a very specific time. Now think about it. If you knew the three-digit number on the lottery was likely, not perfectly, but likely to give you 808, I'm just using it because it's my birthday. If it's likely to do that in this month of the year, are you going to play that 808 number every single week and day outside of that? No, of course not. You're going to do it when it's seasonally apt to deliver it. Are you going to be, as a card counter or a professional poker, are you going to play a table where the shoe of cards gets cold? You're not going to do that. You're going to get up and walk away. What are they doing? They're getting in sync with time. The time of that synchronicity of how those cards are going to come out and how every other card player at the table is going to play now. You think about it. You do these things in your own personal life. You only want to spend time watching the games that you have an affinity for, the teams that you care about. There's lots of games on the weekend, all kinds of sports, but you're only going to plop your rear end down and vegetate on that couch when your team's playing. Doesn't matter who they're playing. And ladies, there's all kinds of TV shows on. All kinds of TV shows on. But your story, your program that you want to keep up with, because the girls at work or the girls at your clique, they keep up with that too. So you want to make sure you're constantly invested in that, so that way you're not outside the loop when we're having conversations at the water cooler. You're on time. But when we get into trading, and then we're not prodded to do these types of things, what happens is we lose sight of it. And we chase every red herring that's out there. By every charlatan that's waving a banner saying, come at my Telegram, come at my Discord, come join my mentorship, follow my signals, follow my methodology. Because you think that's the easiest, fastest route to getting to make money. When it's not. You're just putting yourself further and further behind. When I stopped and I said to myself, okay, listen, I'm only looking at daily charts and 1 hour charts. That was my perspective. I didn't look at anything less than an hourly chart. I couldn't do anything with less than an hourly chart. I wasted so much time chasing things that led me no closer to being profitable or ever consistent, but I kept telling myself, doing these things will get it, and it never did. Until I woke up and listened to the advice that I felt God tell me to say, look in the charts for when it continuously repeats these types of things. Look here. Look here. That's what I heard. Sometimes it was audible. Sometimes it was inside my spirit. Like sometimes it was my own internal voice. And it sounds crazy if you don't have any faith in him, but that's how it worked. That's how it happened. And I started looking for price runs that would occur at the open at 9:30 for S&P. When the currencies would open up, I traded currency futures, not Forex. I didn't really gravitate to full Forex until 2006. I traded Forex a little bit earlier than that, but I didn't touch it completely and 100% leave everything behind until 2006. But I was a futures trader, a commodity trader in the beginning. And I got real comfortable trading currency futures. Deutschmark, Swiss franc, yen. I loved the yen back then. I hate yen now. British pound, Canadian dollar, all that stuff. All the com dolls. And I loved them because they had a gap opening every single day. Every single day. And you've seen what we've been doing with index futures with gaps, right? apply that same logic to currency futures, not Forex, currency futures. And you'll see similar things are there. There's a price run that always took place at a very specific time trading bonds. And once I discovered that, I locked onto that and said, I don't care about currency futures. I'm a bond trader. I'm a bond trader. Because I saw something in that market first as it relates to time. And I said, well, now I didn't know it right away. It was months and months in the first year of me doing it. I was like, wait a minute. I'm talking to my uncle, and I'm telling him, I said, Uncle Stan, like I got something in bonds. It's just so good. But I'm afraid to talk about it because I'm afraid if I talk about it, I'm going to jinx it. And he's already proven it at that time. He's not interested in listening to me because he wants to be a contrarian. I'm buzzing on this idea that I got something that nobody else has talked about. No one else talks about this. I was even afraid to ask Larry Williams by writing to him and saying, listen, because I was like, maybe he doesn't know. And if it's really, really good, he'll treat it like he did with the turtle stuff, and he'll teach it. I didn't want to share it with anybody. I was like, this is so good, I don't want to share it with no one. And I said, you know what? Let me see if I can start doing that same thing in my previous favorite markets, the currency futures. Wouldn't you know it? It's right there too. And I'm like, what in the world? How did this escape me? All this time I'm looking at 50-day moving averages and stochastics, 5 by 3 by 3 smooth on a Williams percent R, and stochastic when they agreed it was overbought, oversold, but the divergence occurred in one or the other. It didn't matter. It didn't. Both of them didn't have to diverge for me. But when they were oversold and one of them diverged bullishly, the next day I'm waiting for the open, and I'm waiting for it to go down below the opening, and I'm going to buy it on a stop as it goes back above the opening price. That was my methodology then. That was the very first inner circle trader. This is my step-by-step. I'm not thinking about it. I had to have a mechanism like that to get me in because I couldn't be in front of the phone, constantly call the orders in. So I had to put resting orders in, but I had to get that opening price, and I could get that on the Quotrek. As soon as it popped up on the screen, I got my opening price, and then I watched and see if it started trading lower. If it went lower when I was looking to go long the next day, and the next day is what I'm looking at in the charts, not the charts, on the Quotrek, on my truck, I would already have the phone number from my broker in my hand, running to the payphone, because that's how we did things back then. I had to have quarters in my pocket, run to the payphone, or if I'd run into an office building and I was doing the delivery for the snacks and cakes and whatnot, I would ask somebody, look, can I borrow your phone real quick? I got to call the office. And yes, I was lying back then, okay? But I was desperate. I had to get the orders in. So I'd call, had to wait for them to answer the phone. Lynn Waldock, yes, H-desk, please. Hold 1 second. The whole time the market's moving around. Imagine doing this today with the volatility. It's nerve-wracking. But you place your order, buy on a stop above the opening price. Stop loss is, back then I could tell the broker, whatever the low was, that's where I want my stop, one tick below that. That was my mechanism. I could only afford one contract. I was trading mid-AMs, which is kind of like the equivalent of a half a contract for today. Like we have mini, and then we have micros, which is 1/10. Well, back then, we could trade mid-AMs, which were like half the size of a full-size contract. And then I'd watch and stress about it all day long. And in the last part of the day, it would flurry and move in my direction. And when I was right, and I was like, yes! Woo! Do my Ric Flair strut, coming out of the truck, getting into a new office building to get my inventory. I got to fill back up in the machine. It was fun. It was fun when I was winning. When I was losing, it sucked. Because when I lost, I felt like I wanted to throw everything away. But the time-based aspects of what I was doing right, that has never, ever escaped me. I've never turned my back away from that. I've had entry strategies I created for myself, and I've abandoned them. I've had full-blown trading plans that I've abandoned. But I've never, since discovering these very systematic time-based price runs that occur in price action every single day, every single week, in every market, I've never left it. And last year and this year, I've been teaching it slowly. I've been revealing a lot of those things to you. Some of them, well, you saw in the Silver Bullet. As soon as 10 o'clock forms, all you need to know is what direction it's moving. Now, no, some of you obviously stress about this. You make it so hard when I've already taught how to do this. You want an everyday bias that's 100%. And you're not going to get that when you're first learning. Learning from me while I'm calling the market, you can get an intraday bias that's pretty much almost as close as perfect, but still yet not perfect. So you're building in no allowance for doing it wrong. Even if you have strategies like I have that are very specific time-based runs, knowing for what liquidity it's going to reach for, but you're demanding perfect. You're demanding perfect. You get caught up when I say, look how the algorithm delivers perfectly. That's not me saying, look how you perfectly traded that bottom tick, top tick, and you got nothing left on the bone. That's not what I'm saying here. But because you're young as a trader, and you're very, very influential, and you're very subjective about what you listen to, you only want to listen to the good sugar-coated stuff. You ignore me when I tell you you're going to lose money. You ignore me when I tell you you're not going to be perfect. It's going to be hard for you. You're ignoring all that. And the ones that do really well, and by the way, again, round of applause for Kyle. Another monster, like I told you. Team, Kyle, and who else is going to publicly come out? ICT stuff don't work, bro. These concepts, this is going to lead to you knowing what to do and when to do it. But that silver bullet, if you know what the bias is for that session, you don't need to know it for the day. Throw that out for right now. You learn that over time. How do you know what the session bias is going to be? Well, how did we gap open? Did we gap open? What liquidity did they leave in pre-market session? That means 7 o'clock in the morning to 9 o'clock, 9:30 in the morning opening for equities. If you're trading Forex, between 7 o'clock and 9 o'clock. Very simple little windows. And you're looking for these periods of where there are smooth highs or smooth lows, because that's where the market's going most of the time. Not 100% of the time, 80% of the time, we'll call it that. Call it 75% of the time. Oh, that ain't good enough. 75% of the time, it ain't worth my time, ICT. We ain't got time for 75% around here. If you can't get it up higher than that, there's rookie numbers. We got to bump them up, or I'm going to move on to somebody else. Go. Don't let the door hit you in your ass. Goodbye. Laziness doesn't survive around here. But knowing that there's going to be a fair value gap every single day at 10 o'clock to 11 o'clock, it's going to form, and it's going to give it to you on a silver platter before it runs to that session liquidity. It happens every day, and I challenge you all to not believe me and start looking for it. See, you've watched me do that silver bullet. You watched other people prove they make money with it. But you've never really sat down and said, how often has it failed? That's what you were instructed to do. Because that's the stuff I walk on. I moonwalk on all these supposed professionals, these guys that, I'm a so-and-so floor trader. I'm a so-and-so at blah, blah, blah capital. Bro, come out here live, and I will sing a dance as these candlesticks go up and down to my music sheet. That's how it works around here. I'm the composer. I'm like Bugs Bunny. Remember that? He raises his fingers up, and the concert pianist and the concert, orchestra, they're out there trying to keep up with his intensity. That's what it's like. I'm the Pied Piper, and these candlesticks, they follow me. And that sounds arrogant. Yes, it does. And I'm okay with it. I'm okay with that. I don't care if you're not okay with it. The proof is in the pudding. The markets are going to gravitate to liquidity, but you have to know how to define that. It's session liquidity first. First and foremost, it's session liquidity. What does that mean? Well, the morning session, the afternoon session, the lunch macro. If it's going to retrace on whatever move it was in the morning, what's it going to be? Move against the trend that was happening in the morning session. Find the easiest low-hanging fruit low. If you can trade that and find profitability that yields enough of a payout for you, then take the trade. But there's lots of trades that pass me by all day long where there are only 10, 15, 20 handles. I could do them all day long. I don't care about them. They're constantly there. They're like a McDonald's or a 7-Eleven. They're on every corner. Drive down the road a little bit more, you're going to see another one. I'm not worried about them. I'm stopping at the bus stops like where my wife's standing there. If I see my wife standing at a bus stop before I met her, I'm stopping at that one and say, honey, you need a ride because I'll take you where you got to go. And you're going to enjoy the ride. I'm not slipping in Nick D's fast food drive-through, okay? I don't slum it like that. I'm looking for the best setups. I'm looking for the things that make sense for me because I'm not a micro lot trader. I'm not a one lot trader. I'm in here trying to get something. And I want my time to yield to me a bountiful harvest. I want something that's going to be worth my risk that I put on, but also deliver gangbuster results like bang. Like Emerald Lagasse, remember him? He would just say, bam! Put his spices on it. He was fun to watch. Otherwise, it was kind of boring, but when he did that, it was great. What's another one, ICT? We already know about the silver bullet. Okay, first percentile fair value gap. It's going to form. It is absolutely going to form in the first 30 minutes. Or it forces you into a silver bullet at 10 o'clock. So what have I done? I've basically encapsulated that first hour trading between 9:30 and 10 o'clock. I'm sorry, 9:30 and 10:30. That first 1 hour trading, that is all I've been doing in front of you. Consistent, isn't it? Boom, boom, boom. Calling every candle. Boom, boom. Running to where I said I was going to go. Boom, boom, boom. Never missing the beat. Boom, boom, boom. All of a sudden, you start thinking to yourself, man, this guy's got his stuff together. Look at this. I mean, he's like consistently telling you where it's going to go. Yep. And you can do it too. I'm trying to tell you, I've already taught these things to you, but how much time have you spent working with it and blocking out everything else? That means everything else I've taught on my YouTube channel. Focus on one thing, folks. What happens if the first percentile fair value gap forms in the first 30 minutes, but price just keeps on running away and never comes back to it? Just throw it away? Just abandon it? Nope. Absolutely not. Wait till 10:30. 10:30 is that first hour trading. In that first hour of trading, you have the bulk of all this large influx of big conglomerate liquidity coming into the marketplace. It's shoved into the marketplace in the first hour. That's why there's so many opportunities for price to move around and gyrate. But after that first hour, if it's a trending day, it's obvious after the first hour. And it just continues and continues and continues until the close of the day. But as a trader that's looking for setups using the first percentile fair value gap, obviously, if you're bullish, you're looking for session relative equal highs. That's either going to form between 7 o'clock and the opening about 9:30, or London high or London low. You got two choices there. Which one has a relative equal high or relative equal low? Hello. Hot damn. That's easy. That's easy. That's real easy, isn't it? It completely removes the ambiguity, doesn't it? Now, you would have figured that out if you listened to everything I said to focus on per session. But because you're out there looking for the next shiny object that I'm releasing all the time, you're never spending enough sufficient time working with what I already taught you. Can you teach me how to do a bias? It's easy. I did it again here. And it'll go largely ignored. It'll go largely ignored. Nobody will look back and see how many times it tells you exactly what to do. But you're worried about, am I going to do a Telegram session? Am I going to ever do a live stream? Am I ever going to do this? Am I ever going to do that? I told you I could stop. You already have enough. But what happens if it keeps running? It never goes back to that first percentile fair value gap. In the first 30 minutes, a fair value gap that forms on that 1 minute chart that has displacement. It's obvious. It's showing itself, not some little micro separation. If it never comes back to it before it starts running, wait till 10:30, because you have the first hour trading behind you now. Between 10:30 and 11:30, you have now London close. ICT, we're talking about SPOOs, bro. We're not talking about cable and fiber, currency futures, and that type of stuff. We're talking about why does London close have anything to do with this? Because that's what markets do. They're coded to offer a retracement back down into a fair value. And that's how I teach you, and I've done it. I've done it in front of you. You can't deny that. I've shown it to you. I've walked you through it. I've called it out in Telegram, and you've seen me trade it. Live funds, baby. Pulling back into what? First presented fair value gap. Oh, yeah. How about that? It doesn't have to be the propulsion stage or springboard to put me in the trade. Sometimes it's going to run without me. I might be looking for that first presented fair value gap to get me on the trade. And the market says, not today, ICT. Okay. I got you. No problem. Do your thing. I'll be waiting for you when you get to 10:30. And when you walk yourself inside my crosshairs, I'm going to hug the trigger. And I'm going to drop you. And I'm going to take my profit inside that first presented fair value gap. At least the very first partial will come out there. If it's on a day where I think it's going to go lower, why would I want to see through that? Because in London, there's relative equal lows down there they left generously. That retail's going to say, man, my stop is so protected under there. Ain't never coming back there until it does. Expediently. Daily highs and lows. Previous day's high or the last highs in the last 3 days. Because power 3 is not limited to just how one candlestick forms the open, high, low, and close. Power 3 is spreading out when we look at these books, buddy. It's going to be real interesting. Swing highs form and swing lows form with 3 ranges. Whatever time frame you're looking at, it requires 3 ranges. Now, you can have equal highs with no wicks, and that could become a turning point. They require something else that I'm not going to teach here because it takes a little bit more time to go beyond that, and I'm going to be escaping here in about 10 minutes. But a swing high and swing low requires 3 ranges, whatever time frame you're looking at it under. If you're looking at it on a daily basis, you have to know what the last 3 days high and low have been. If you don't have that information, you're ill-equipped and not informed. Because those pools of liquidity are gold mines. They are so influential over what price is going to gravitate to. It's nuts not to know what they are. How many times have you seen me call at the beginning of the week, here's where price is going to start gravitating to? It's several hundred handles away. And the market runs up. It's right up there, falls short about 80 handles, creates a swing high, and then it plummets. And you're thinking, look at this guy, wrong. I can't wait to go on Twitter, can't wait to go on X. This guy is such a failure, blah, blah, blah. And it just goes down to something as a discount that I'm trading in front of you, calling it in Telegram, and then I'm running it up into that target. I love those setups. They place that swing high there just below a target that I know is a draw on liquidity, which is an old daily high, which is a previous week's high. No, that's not earth-shattering. No, I didn't invent that. I didn't say I did. But all you yahoos out there that want to talk smack all the time, you literally don't do it because you're looking at something else. And you're posting, here's my $700 win. Here's my $500 win. What are you doing, ICT? An annual salary. Just saying. Just saying. Swing highs that form just below or just above draws on liquidity that I've shared openly with you. Look at what I've been teaching you. Look at the ones I've shown you. Why have I brought them to your attention? They're fitting the criteria I'm outlining here. Previous week's highs and lows. That liquidity is enormous. It's enormous. They're all time-based setups. They're never going to hide the daily high from you that was yesterday. They're never going to be able to do that. They're never going to be able to do that. But in Forex, they can. Compare all the major brokers for Forex. Look at GBP USD. They're never going to agree. They're never going to have the same high. They're never going to have the same low. That market, especially right now, has so many disadvantages versus the futures market. The futures market, everybody has the same high. Everybody has the same low. So that means every bit of liquidity that's going to be above the high is concentrated at that high's price and just above it. You cannot have that same affinity in Forex because there's a disparity. And when you look inside how those brokers operate, they have smaller little pools where they're trading against their clients. I could show you that because I had brokerage accounts through GFT, which I don't even think they exist anymore. They shut me down when I mistakenly talked out loud when I was on the phone. I said, I was letting my son trade one of the accounts, and they're like, "What did you say?" I was like, "Yeah, I was letting my son. He was, I'm trying to teach him how to trade." And he goes, "Well, you're not supposed to do that." And I was like, "Well, just pretend you didn't hear it." And he finished the conversation with me, and immediately they sent me notice that they closed the account. Okay, but I found out because I had multiple accounts in that brokerage firm, those highs didn't agree. Just like FXCM, remember them trash brokers? Remember that trash broker FXCM? Same thing there. Multiple accounts, friends that were trading too. Their highs are different from mine. I'm like, what in the world? Wow, that's way different from what I got. You don't have that problem when you're trading futures. NASDAQ's high is NASDAQ's high. But having that pool of liquidity, it's time-based. It's time-based. You're never going to be able to hide it from you, ever. They're never going to be able to hide it from you. New week opening gaps. You've all fallen in love with them, haven't you? They're like magnets, like black pools. No light escapes them. They suck in everything. Beautiful, isn't it? Isn't it beautiful? You can see how they just go back and forth, gravitating to this one, to that one. There's so many setups intraday that you can take with that. And you don't even need a bias. You don't even need a bias. If it's in close proximity to a new week opening gap high or low, and it creates a fair value gap that's bearish and the new week opening gap's lower by 20 handles or a little bit more than that, you have an easy bread and butter setup right there. Oh man, it's easy. That's easy. At the end of this year, I'm going to give you a challenge going into next year. Don't do it now. Next year. I want you to try to go into the day with a demo account and always be in the market. You got one contract, micro contract, and I want you to constantly stay in the market for a set period of time, the entirety of the AM session, or the entirety of the PM session, or the London session, or if you're really gung-ho about it, the entire session. A lot of people don't have the stamina for that, but I've done things like that. I've conditioned myself to do that. It's constantly, I got to be in a trade. If I close, it's only because I'm reversing. You want to learn how to really get a feel for price action? Practice like that. And you will be a maestro in market structure. And you will run circles around anybody else out there that has a title that they work at this firm or this, I'm a Goldman, I'm a this, you're a goober. Okay, you can't do anything. Because if you could do it, you'd be out here moonwalking in front of everybody doing it, but you ain't. You're laying on your title. Who cares about that? You're trading other people's money. You don't even suffer the real losses when you have a loss. So what's that really telling you? New day opening gaps. The opening range gap. They're all time-based mechanisms. These things cannot hide from you. And when you strip it down and say, okay, I'm going to look for the setup that runs into a new week opening gap. I'm going to forget everything else that ICT ever said. I can see this happening every day. When your weak analysis, W-E-E-K, not W-E-A-K, your weekly analysis suggests that we're going downtown for a while, a couple hundred handles. And you see intraday, after a rally in the morning, up, and it's starting to break down, starts to roll over a little bit. Now you see that we're just hovering above a new week opening gap, whether it be this week's new week opening gap or last week's new week opening gap or any one in the last 5. That is a no-brainer trade. They're going to be such an easy ride. Low resistance liquidity run right down to the new week opening gap high. That's it. Don't try to get in there and get fancy with the constant encouragement of it. Don't try to get the whole new week opening gap. Same thing with the new day opening gap. If you use these as little magnets. You're tossing your coins in the direction of that magnet when you put a trade on. Sure, not every one of those coins are going to be magnetized and gravitate right to it. You might miss a little bit of the move. Even if you get close to it, it's just like in horseshoes. If you get out in the direction of that new week opening gap or new day opening gap from where you entered, if there's a difference that allows you to make your ends meet, your car payment, your car insurance, pay for your groceries for that month, you know what you're doing? You're eating. And in this world right now, that's the number one priority right now. You're not about getting rich. That can happen over time. But you got to learn how to eat by your own hand. Not the person you're getting a paycheck from each week or bi-weekly. You got to learn how to do this on your own. And you have enough tools now. You have enough things from my repertoire, my arsenal, but you aren't doing anything with it constructively. You have to strip it down and say, okay, when am I able to do something in the marketplace? And which one of these tools am I going to use to draw on for liquidity? Because that's the secret, folks. You want to know the secret to trading? Where is it right now, and where did it come from? Where did the price just recently come from? Did it just run below a swing low? Okay, if it did that, and you have relative equal highs above you, you have a 90+% chance that thing's going up there. Even if it fails to go up to the relative equal highs, you have something that will yield you opportunity to take something out partially. I posted something this week, and I said, if you start framing the risk in trade management around your first potential profit, where you take a partial, and you should know what that is before you can put your trade on. If you're rushing in there, oh, I gotta get in there, you're not doing what you're supposed to be doing. You should already know where you can get out with something, even if you are wrong. But you don't want to hear about that. You don't want to admit that you're probably going to do it wrong. Let me tell you something. The reason why I'm not doing every day in Telegram is because there's a whole lot of manipulation going on in the market right now. And me against the hand's going to win. That's just me being real. I know where my limitations are, but I also know that the market can't stay like that in perpetuity. So I'm just chilling. I'm being real quiet, reserved about what I'm doing privately. I'm not placing my stops publicly. I'm not telling everybody what I think it's going to do right now, because I'm in here trying to make ends meet too, right? In a way. So what are you going to use? What are you going to have your core model wrap around? What is it drawing to? It's not your entry mechanism. I have 80 plus of them. The ones that are constant, that always agree all the time, no matter what I'm trading, what model, are these periods of where the market creates this pool of liquidity. Inefficiency or liquidity. And they are perfect. They're perfect in their understanding of how it's going to draw price at that time. If it doesn't draw to them and it starts to move away after I enter a trade and it says, no, I'm not interested in going down there, then it's easier for me to cut the bait and say, okay, I'm going to take the loss here. I won't let it take my stop loss. It gives me clarity. A lot of you ask these questions that I've answered without actually addressing them, verbatim. A lot of the questions you all send me in my comment section or post to me on X, I have answered all those things in the natural delivery of the content. But you're looking for a way to avoid 500 plus videos when not all those videos should be looked at right now. Why all of you are still studying the old stuff when I've been presently calling it live right now is beyond me. I don't understand that. Like that, you stand in front of a magician, a world-class magician, and you're there to learn how to do and perform magic. And say, listen, David Copperfield, hey, listen, which one of your old CBS broadcasts do you recommend that I watch to learn from you while he's doing a workshop for free every single day? It doesn't make any sense to me. That shows me that the person that's asking that question or trying to do that has clearly no idea what they're getting involved in. They're not prepared. You're not even ready to be doing anything in the marketplace. If you're thinking like that, like Imagine going to buy a car. It's a used car, but it's a vintage muscle car. It's decked out. It's been well preserved. And you say, hey, look, I'm here. I'm interested in your car. Okay, you want to test drive? Nah. I want to look at what other cars you have. How'd you take care of that? It doesn't make any sense. Where's your focus? If someone's going to show you the goods, prove it to you in front of witnesses that this is how the market's going to deliver price, and they have rule-based ideas, and it says, now watch how the market gravitates to this level here. My teaching style is, I'm not going to put you in the trade. I'm going to show you where the market's going to go. Why did I do that? Because I know that all of you have a different personality that's going to lead to you seeing a bullish order block, and you have no affinity for the fair value gap. You don't know how to pick an order block, but you can see a fair value gap, and that's your model right there. Or, hey, I only trade breakers, bro. Breakers are nothing. Okay. I'm allowing you as my students to bring that personality, that choice of PD array. There's nothing that says that PD array is better than the other one, unless you want to mathematically define it by which one formed first and how much it yields to the target. That's the only way you can adequately say which one's better. And I'm saying that, regretting it already, because you're now thinking, okay, so now my pursuit, he's saying, without saying it, it's code word to look for. I didn't say that at all. Not everything I say is a mystery. Okay? Not everything that I'm saying is meant for you to go in and start thinking, he just said something. Let me start cracking the code. It's this plain, simple logic. Your choice of PD array is perfect for you at this moment in your career and your development. It doesn't mean that that's going to be the one that you stick with all the time. But once you learn how to use it, you have that behind you now. It's in your belt, okay, your utility belt. It's in your toolbox as a trader. And then you explore the use of another PD array. And over time, you might have 2 or 3 that you got really, really good with, but you'll learn how to use all of them to agree that the trade you're in is still good. That's the graduating approach to using what I'm teaching you. Find one to start and get a baseline understanding. You have to have a beginning baseline. How often does it deliver? How many times is it delivered at that time of day? What time of day? The opening, 9:30 to 10 o'clock, the opening range. 1:30 to 2 o'clock, the PM session, opening range. London, you start the day with true day at midnight to 12:30. That first 30 minutes. That's how I started trading the Globex with currency futures. That was my opening range. That was it. It still works today. It still works today. ICT, what are you going to do when they make NQ? They take away the stop in the afternoon. They're going to change the algorithm. No, they ain't. Because they cannot hide liquidity. There's always going to be inefficiencies. And there's going to be people that did something wrong. And I know what they are doing when they're doing it wrong. I told you, I got tricks I've never shown before. It could literally turn everything upside down, and I'll still be out here doing what I'm doing right now. That's confidence, folks. You can't buy that from a course. You can't learn that from a mentor. I've been doing this far too long to worry about what they're going to do to change it because they don't like I'm teaching people how to become rich. The cat's out of the bag, baby. CME, kiss my ass. You can't stop us. You can't stop us, period. Put that in your pipe and smoke it, you sons of bitches. You can't stop us. You can't do shit to stop us. You feel the charge? Yeah, you ain't doing shit. You ain't doing nothing. Make the market move all around. Do it. Move it all around. Clear the board. You can't keep it up because those large influx of flows that come in that you want to get those fees from when trades are taken, they're going to dry up. You got to calm that shit down real fast. You got to calm it down. Bring that volatility back in check so these large institutions feel comfortable again because they're not comfortable right now. These are all little storms that last for a short period of time. As a new trader, you don't see it that way. They're changing the world's algorithms. No, they're not. They're disrupting things. Of course they're doing that. But that doesn't mean they're changing things that you're going to be using in the future for the rest of your career. So what if they do away with a new day opening gap? I got tools that they don't know I got. There's things that are just tucked in behind the code, just behind that source code that they don't know shit about. So I ain't worried about that. And neither should you. You have other things that you could be doing besides that. There's other things I taught you besides the new day opening gap. There's nothing for you to worry about. There's no fear that you have to concern yourself with. Nothing. You shouldn't be obsessive about nothing, period. Long and short is, all of these PD arrays, in concert with very specific pools of liquidity within specific times of the day, days of the week, Monday, Tuesday, Thursday, Friday, beginning and end of the weekly range. What happens if it's quiet on Monday and Tuesday? Well, you know what's happening on Wednesday and Thursday. You're going to have range expansion. Where do they lead the relative equal highs and lows on Monday and Tuesday? Because that's what they're going to gun on Wednesday and Thursday. How do you know that? Well, I know with a 90% likelihood it's going to happen like that when the economic calendar says there ain't nothing to worry about on Monday and Tuesday, but Wednesday, boom. What happens when they have CPI and PPI? You know, nobody can predict that. I don't try to stand in front of it. When I was younger, I tried. And I was picking up my ass with broken fingers and missing teeth. It's not fun. It would cleanly sever you. Let it happen. Let it happen. See what they left. Because the first point of indication you have right there, as soon as they rip that market higher or lower, the lower high it formed at 8:30 when that news report comes out, that's where they're going to take it back to. Because they know somebody gambled. And they're going to come back there and knock them off and keep running over top of them and go the other direction, or go back in the same direction and do half of the move that the report came out, or continuously go in that run after the report came out. These are things that can't be hidden from you, folks. But see, you don't think that way because you're looking for the Reaper, the Wraith, the Silver Bullet's second cousin. You're always looking for something new that this is going to be easier for you. Notice it's not getting any easier for you. It's still staying the same. But I'm giving you a menu to choose from how you're going to sit at the table and eat. How are you going to do it? What utensils are you going to use? You're going to feed yourself with a butter knife? Or are you going to use the spoon? The fork? Think about it. It's etiquette. You have to use proper etiquette when you're dealing with the marketplace. Which PD array are you going to eat off of? When you get down, you sit at a nice five-star restaurant, you don't sit down and say, hey, you, take a look at this. I'm here. Watch this. And start just grabbing whatever you want with your hands. Or eating with the wrong fork. Instead of a salad fork, you're eating with the entree fork. You're messing things up. There's an etiquette to it. And you have to know what your model and what its approach is and how it's used. That's etiquette. You're not trying to do things outside your model. You're not trying to do something that you're not supposed to be doing. All of these setups I've mentioned, these conditions, they have an infinite level of yielding supply to you. I could remain silent for the rest of my days on this earth. And what I've said to you today, for those who have been with me for a while, and you understand what I said, because I know some of you are brand new, you're like, I have no idea what this guy's talking about. Why is he yelling? To get your attention, because I know some of you are falling asleep or bored. Grabbing you by your lapels and shaking you. Listen, you're looking at the wrong things and obsessing about the wrong stuff. This is what you should focus on. That's what makes me ICT. I know what time it is. I know what time it is. And I also know what time it's going to get there. I'll never teach you that. But I can teach you when it will start. It doesn't do anything to me. Can't get in trouble doing that. Bottom line is, you're seeing my students doing it. And there's a new influx of new students proving they can do it in their own hands. I'm not guiding them. I'm not guiding them. They have worked for it themselves. They put the time in. They've worked on studying. They back tested. They don't care what anybody else says about me or whatever I taught. They don't care about that stuff because they have seen enough. The little bit of study they've done, they say, I see something there. I'm not going to let go of this like a pit bull in a pork chop. I'm not letting go. I'm not letting go, damn it. I'm going to figure this out. And you need to have that tenacity. Because if you don't have that tenacity, you won't make it here as a trader. I don't give a shit if you're learning from me or someone else. I don't care. You need to know that this is for you. No one's taking it from you. Try me. I ain't never letting go. That's your attitude. That's how you're supposed to have it, that mentality. If you don't have that, you need to muster it. You need to build it up inside you and say, you know what? This is from me. No one's taking it from me. And I'm not going to be denied. You can't. You can't withhold this from me. When you have that, unstoppable. Unstoppable. And then when you have the model in your hand and you know exactly how you're going to perform with it, you have no idea. You have no idea the potential you have then. Every goal that you ever set, smashed. Every goal that you ever imagined within your reach, smashed. And you look around and think, man, I did not have high enough goals. This was too easy. This was too easy. But while you're going through it, it seems impossible. It seems like you're never going to get there. You'll never get there if you quit. If you listen to other people, you're never going to get there. You're inviting people that are stupid. They're ill-informed. They have no idea what they're talking about. They're not doing it, so why are you even listening to them? They're not doing it. So why are you taking other people's advice that aren't doing shit? If they're not doing better than you, they don't have any opinion on how to make you better. But you all listen to that stuff. Cut it out. Cut all that stuff out. Go right to the core of what you're doing this for. You want to be self-sufficient. You want to be able to make this money on your own. You don't want to listen to me. You don't want to listen to anybody else. You don't even want to be on social media. Fuck these people. You don't want to give a shit about what they say about you. You don't care. You don't give a shit if they see what house you live in. You don't give a shit what kind of car you drive, how much money you got in the fucking bank. You don't care about none of that because you're living your life. You're taking care of your family. If this fucking offends you, I don't give a shit. Move on down the fucking road because this is where the rubber meets the road, folks. No one's going to protect you. I can't protect you. You're going to fuck it up if you fuck it up and you did it in your own hands. But if you do the due diligence and say, I'm cutting all the bullshit out today. I'm cutting it all out. I got no excuses now. He said it. I got no excuses. It's there. It's in the charts every single day, every single week. What am I going to do with it? Not one of my students is doing everything I ever taught. Not one of them. The ones that are millionaires, they found one thing that made sense to them and said, fuck everything else. I don't need it. This works. This works. It works in my hands. I don't lose sleep over it. It's what I needed the whole time, and I recognized it, and I don't tinker with it. I don't try to improve it. It delivers. Done. You don't go in and tell your boss, you know what? I worked last week. I said to myself, you know what this guy needs? I need to fucking work for half my salary. I need to do my due diligence to make this company better. Fuck it. I'm giving half of my time, half of my salary for my time because you know what? I care about this company. Fuck no, you're never going to do that. You're never going to do that. But that's exactly what you're doing when you half-ass trying to learn this. This is the hardest, easy money you've ever made. And the only thing that complicates it is the person you see in the mirror. How long are you going to let that person in the reflection of that mirror hold you back? You got to tell that person that you're looking at in that mirror, why are you dragging ass? Why do you keep messing us up? Move out of the way so we can get there. It doesn't matter who else agrees with us. It doesn't matter who else believes in us. I believe in me. I believe I'm going to do it. You may not see it yet, but when I look at you again, months, weeks, years from down the road, you're going to see what I already see because this mirror lies. It's showing you something that you don't look like when I look at you. You think you look like that person in the reflection of that mirror. You don't. You don't. It's backwards. And it's not shocking when you think about how we think ass backwards. We think about things backwards because we don't think we deserve it. Bullshit. You deserve it. The fact that you're still listening to me, bloviate. You know you want it. You can fucking taste it. It's within grasp. You know it's there. You just got to keep digging. And it's going to happen for you. It's going to happen. You think fucking Kyle didn't feel like he was defeated a couple times in the beginning? Of course he did. Kane, you think he couldn't fucking have a bad day and think, man, this shit's never going to happen for me, bro? What's going on? I have dozens other ones that I'm begging for them to come forward. Not because I'm selling a mentorship, but I want them to know that, want you all to know, they're not the only millionaires. They're not the only millionaires. But they don't give a fuck about you. They don't care about your opinion. Why? Because they're living their life anew, brand new. New step, new spring in their step. Why? Because they don't need ICT no more. And guess what, baby? Woo! That's exactly what you do when you graduate. Fuck you, ICT. Thanks, brother. See ya. That's exactly how I want you to do. I don't want you tethered to me. I don't want you constantly tethered to me. I want you to say, thank you so much, but I ain't got time to be messing with you no more. I got things to do. Places to be, boom. That's exactly how you leave the nest. That's it. We're done.